meeting to order. The time is 4:10. As a reminder, please note that board meetings are being recorded for the convenience of those unable to attend this video conference. A recording and closed captioning will be posted to the BERS YouTube channel following the meeting. Alex, could you please call the roll?
Of course. Tazeen Azad. I can see you in the sidebar, but if you're speaking, we can't hear you. Thank you. Thank you. Janelle Chacon. Marjorie Dienstag.
Present.
Thank you. Gregory Faulkner.
Present.
Thank you. Cherie Gibson.
Present.
Thank you. Angela Green.
Present.
Thank you. Allison Hirsch.
Present.
Thank you. Ruth Maria Kenley.
Present.
Thank you. Kyle Kimball.
Present.
Thank you. Anthony Lopez.
Present.
Thank you. John Maderick.
Present.
Thank you, John. Donald Nesbitt.
Present.
Thank you. Alan Ong.
Present.
Thank you. Kaliri Salas Ramirez.
Present.
Thank you. Benjamin Schanbach or Russell Buckley.
Yeah, Russell Buckley here on behalf of Benjamin Schambach and the Chancellor.
Thank you, Russ. Thomas Shepard.
Present.
Thank you. Karina Taveras. Gladys Ward. Okay, we have a quorum.
Thank you, Alex. First order of business is an attorney-client session. May I have a motion to enter into attorney-client session?
So
So
moved.
moved, John and Nesbitt. Second, John and Nesbitt.
Thank you. Any opposed? Any abstentions? Karen,
And the recording has resumed.
thank you. We are back in, well, is it okay to proceed, Karen?
Yes, yes.
Okay.
Recording has resumed, so you may go. You may proceed.
Okay, great. So we are back in public session. First order of business is calendar item number 1, determination regarding the state of emergency. May I have a motion to consider?
Motion, John.
Thank you,
Second.
John.
Don-
Thank you, Donald. This is a determination regarding the state of emergency pertaining to the monkeypox virus. When I call out all in favor, if you wish to vote in favor of the resolution, please unmute yourself and respond in favor. Similarly, if you wish to oppose or abstain from a particular vote, please unmute yourself and respond accordingly when I call out any opposed, any abstentions. All in favor of the determination regarding the state of emergency, please respond in favor.
Sorry, can I just ask a question? I'm sorry, the determination is to remain remote because due to the state of emergency for monkeypox.
That's correct.
That's correct.
Thank you.
Okay. So all in favor?
Aye, John.
Aye, Tom.
Aye, Donald.
Aye, Alan.
Aye, Janelle.
Hi, Cherie.
Hi, Margie.
Any opposed?
Hi, Allison.
Opposed.
I, Kyle Kimball, am opposed.
Any abstentions? Okay, with a majority of members voting to approve, the motion passes. The next item on the agenda is calendar item number 2, noting of the minutes of the board, of the meeting of the Board of Retirement held on September 8th, 2022. May I have a motion to consider?
So moved. Tony.
Second, John.
Thanks, Tony. Thanks, John. Let's see. All right. All in favor of approving the minutes for September 8th, 2022, please respond in favor.
In favor,
Aye,
Donald.
John.
Aye.
Aye, Greg.
Aye, Alan.
Aye, Tom.
Angela.
Aye, Tony.
Any opposed? Any abstentions? The motion passes. Next item on our agenda is the executive director's update. Sandy, do you have any remarks for us?
Yes, and I'll keep it very short. No update on staffing. We still remain 12 open head count down. We will have a presentation at the October board meeting on significant increases in the number of young and recent hires that have been departing, and we'll be giving you the data on that. Educational opportunities, I'd just like to reiterate some of the things I've already laid out before. October 8th to 11th, the National Council of Teachers Retirement Systems Annual Conference. October 23rd through 26th, the NYCBERS Public Safety Conference and National Accredited Fiduciary Program is offered. I want to thank the trustees who signed up for the Baruch Mopi Fiduciary Trustee. That begins October 7th, runs Fridays. And then there is a January 17th through January 20th Coriad Plan Sponsor Educational Institute. We'd like you to mark that date. That's a very good opportunity. It's a little bit smaller conference and is actually had very good content. We've supported it for many years. And my final comment is that Chitra Subramanian and her team in fiscal operations received the GFAO Certificate of Achievement for Excellence for BERS fiscal 2021 annual financial statement. I was going to suggest that I would deliver it to you on our next meeting, but we will mail it out. And that's it from me. If there are any questions, be happy to respond.
All right, there we go. Thank you, Sandy. The next item on our agenda is the introduction of the Chief Investment Officer. Is there a motion to discuss?
So
We have no
moved,
motion?
Donald.
Great.
All right, thank you. So let's see, we have Stephen Meyer, Bureau of Asset Management's new Chief Investment Officer, here to make a few remarks. Steve?
Yeah. Terrific. Thank you. Thank you so much for your time today. I know you guys are all busy and have a full agenda, I'm sure. My name is Steve Meyer. I've actually had the privilege of serving as the Chief Investment Officer for the Bureau of Asset Management now for 7.5 weeks. It's been a wonderful opportunity and experience so far, and I'm looking forward to meeting all of you, hopefully at some point in person as opposed to virtually. What I've been doing for the last 7.5 weeks is really getting to know my team, our investment managers. I've had the privilege of meeting with a number of the trustees from the various 5 pension plans. Again, like I said, look forward to continue on that track. I'm also becoming much more familiar with our internal operations and how we get things done here within the Bureau of Asset Management, really with an eye to how we can be a better partner for the trustees, how we can better service the trustees and help drive the investment performance for the underlying plan beneficiaries and participants. So a lot to think about in a short period of time. To be very candid, I have many more questions than I do answers at this point. But I'm sure, collectively working with the trustees and working with my colleagues here in the Bureau of Asset Management and the Controller's Office, we'll be able to figure things out and hopefully, again, deliver that outperformance and efficiency that we all strive for. So open up to any questions. I don't know if by way of background, I have been working in the global capital markets here in London for 38 years. I've been an institutional investor for the last 22. Again, I'm anxious to work with you and serve you and to make sure the operations here at the Bureau of Asset Management are working smoothly.
And
Welcome.
just For
Thank you.
new trustees, we discussed this a little bit at our last meeting, but you know, the chief investment officer in the Bureau of Asset Management and the Comptroller's office manages the investment portfolio for BERS and the other 4 systems. And I'm going to speak on behalf of Steve, but I know at Thursday's executive committee meeting, he'll be providing a quarterly update. But also at any point, if there's time on an agenda to, like we discussed, I think at some point, maybe offline last month, to, you know, have the Bureau of Asset Management come in and do a presentation of what the work of BAM is and how the Bureau works to serve the trustees on the investment side of the ledger. I know Steve and the team would be happy to do so.
Yeah, very much so. And I've also had the pleasure of spending time with Antonio Rodriguez, who I see on the call, and getting to know him and working more collaboratively with him as well. So absolutely, would love to come in and spend time and just kind of go through what we do at BAM and how we think we can help drive, again, that outperformance and transparency and be a better business partner in that process.
All right. Thank you. Thank you, Steve.
Thank you very much, Tom.
All
Thank
right.
you all.
So the next items on this afternoon's agenda are calendar items 3 through 18, the ordinary business of BERS. May I have a motion to consider calendar items 3 through 18?
So moved, Tony.
Thank
Second,
you,
Don
Tony.
Nesbitt.
Thank you, Donald. Alex, please tell us about the ordinary business of BERS.
These are all the retirements, death benefits, and refunds that have been processed since the last meeting of this board.
Thank you, Alex. We will now vote on these items. All in favor of approving calendar items 3 through 18, please indicate your approval now.
Aye, Tony.
Aye,
John.
Tom.
Aye.
Aye,
Aye,
Colin.
Colin.
Aye, Donald.
Aye, Margie.
Any opposed? Any abstentions? Thank you very much. The motion passes. The next item on our agenda is calendar item 19. Adoption of an administrative budget for fiscal year 2023 for the Board of Education Retirement System. May I have a motion to consider?
So moved, Tony.
Thank you, Tony.
Seconded.
Thanks, Ben. Daniel and Chitra, please tell us about fiscal year 2023 budget.
Good afternoon, everybody. My name
Good
is Chitra.
afternoon.
Good afternoon. My name is Chitra Subramaniam. I'm the Director of Fiscal Operations. I would like to introduce the administrative budget for fiscal year 2023. Can you all see the presentation?
Yes.
Okay, thank you. The preliminary budget for fiscal year 2023 is at 31.6 million, comprising of 18 million for the personal services and 12.9 million for the other than personal services. Looking at the budget trend, for fiscal year 2021, the budget was at 27 million. It included 16 million in the PS and 10 million in the OTPS. For fiscal year 2022, the budget was originally approved for 30.3 million. The approved headcount increased from 126 for fiscal year 2021 to 136 for fiscal year 2022. For fiscal year 2023, the initial budget request was for 34 million. The revised budget now stands at 31 million, comprising of 18 million in the PS and 12.9 million in the OTPS. I would now like to hand it over to Daniel, who would be discussing the key drivers for fiscal year 2023's budget. Thank you.
Good evening, everyone. I'm Daniel Miller, BERS Deputy Executive Director. Please excuse my voice. I'm battling a cold right now. Some of the main drivers of the cost was the increase in the fringe rate from the city, sort of 500,000. as well as a $500,000 increase in Velocity contractual obligations. Velocity is our operating system that we use at BERS. Another expense was the medical unit. We're in-housing our medical unit that used to reside within the DOE. We're hiring our own doctors and building out an office to do medical exams at BERS at $260,000. About $250,000 were required promotions for staff that were doing out-of-title work that required them being promoted to different levels. $200K was a new disaster recovery center in New Jersey in case an issue happens with our home base in Manhattan and Brooklyn. Another $140,000 was multi-factor authentication and caller ID services for our member services and online member services system. Next slide, Chitra. So the budget we presented in May and June was $2.9 million higher. At some discussions and feedback with the board at that time, we've revised the budget downward. And these are the categories that we decreased. $700K, not hiring any additional temporary staff. We're pushing out some of the tickets and projects for Velocity to the next fiscal year at $630K. For some projects that are not high priority right now, we're also pushing back to the next fiscal year. It's another $630,000. We're reducing some of our consumables and non-consumables for $465,000. We're reducing the training programs of BERS staff by $160K, and we're also reducing our conference budget by about $100,000. If any of you have any questions on any of that, please let me know. Thank you.
All right. So first, Daniel, I hope you feel better.
Thank you.
So are there any questions from the board?
I just have a question. Two questions, I guess. One is, what is the current conference budget that's going? Yeah, what's the current conference budget?
You pulled it up, Chitra?
Yeah.
You mean what we voted on today, Allison, or last year's conference budget?
I guess, well, yeah, last year's budget. Is the I guess the decrease the same as last year's budget, or are we still adding more?
Well, it went up from last year's budget. I can't remember the exact number from last year, but I know it went up because there were more conferences this year, since still COVID, just a little bit more travel. A lot of conferences that were virtual have went back in person. So I can get you that number. Give us a second to pull it up.
Just curious.
Yeah, it was 187,000 last year. So we requested a little bit slightly higher budget this year, but we are scaling it down again.
Okay, so I'm having a little difficulty seeing everyone if you're raising your hand because of the present. Oh, there we go. So I'm watching hands pop up here. So I see Donald, Greg, and Tazeen.
No, I guess for me, I do want to go on the record to say this. In the beginning, we spoke of raises to staffers within the organization. I do want to say I'm comfortable with passing the budget, but I have some reserves based upon that. In the city of New York, the morale has gone south with workers in just in general. In my conversations with some of the staffers at BERS who are not on the executive level, the morale has actually dropped because there was anticipation there or for something to happen around some type of monetary raise. I will say if it doesn't happen in this budget, at the first sign of any collective bargaining agreement with any union in the city of New York, that should be, if that is the reason that we're not doing it, in which it shouldn't, right? Because the retirement system is considered different. That's the reason that we have corpus funding. I think everyone saw my email in regards to that. I will say if we do not pass it in this budget, at the first sign of anything happening in the city, we need to make sure that the people who take care of our members are taken care of and that we retain them. And all of these things are important to me. So I do want to go on a record to say, if we pass the budget, we need to revisit this and make sure that we're taking care of those who are taking care of our retirees. The BERS staff, I have to say this, with some of the problems that exist in servicing. If we reach out to any of them to get to a member, it is immediate attention. They take their time. There are no complaints from members in regards to the service they receive once they connect with someone. And so for me, that is more of a need for us to look into taking care of them. And again, I will say if we do not do it now, it is something that we need to be laser focused in on at some point, because we have to take care of those staffers there. It is very difficult. I'm looking across the agencies. It doesn't matter what title you hold or how much money you're making. Even locals in DC 37 that have IT workers who are making six figures, they're having problems either retaining workers or hiring workers. At a retirement system, if that is happening, that is problematic. And so at some point, I will say this is something that we do as a board need to get laser focused on and look at our staff, because in my conversation with some of the staffers who again are not Sandy or not Daniel or not Antonio, who are on the executive level, some of the other staff that provide services to our members, the morale, even at the retirement system, is going south. And for me, that's a problem.
Well, just to clarify that, Donald, that 4% increase is not included in the budget you're voting on tonight.
I'm clear. Thank you, Daniel, for that. I'm clear. That's not in the budget. My comments are just, I don't have a problem with the budget being passed as is, but at some point we need to look at that. Thank you.
Thanks, Donald. So we have Greg, Tazeen, and John.
So is that thank you, Tom. Don, I think you said it pretty well. I mean, I struggle with this because I feel that, in a time of inflation and financial difficulties, that we're not really doing anything for the employees, and that's been a struggle for me. I mean, we heard earlier, and at several of our meetings where we're having a hard time retaining some of our staff, and that morale is low. And I think that it would have been great if, even if it wasn't financial, finding some way to compensate, maybe in other ways, our staff. And so this is, yeah, I know in the past I've cast some votes, or I've had struggles casting votes, and I know what was said to me is that sometimes we have to make those kind of difficult choices, and I think this is one of those that is really difficult for me to not, given that we now that there is an opportunity to possibly have done something for our workers, that we may be put in a position where we're not able to do that, and that's difficult for me. Thank you.
Thanks, Greg. So we have Tazeen, John, and then I'll ask a question.
Thank you, Chair. Thank you, Chitra, and thank you, Daniel, for going through the presentation. I was just interested, a point of clarification, the moving of medical assistants, if it helps to look back on the slide, um, that'll be helpful. I don't remember the exact wording, but they're moving, the relocating of medical assistants, doctors, and examinations from DOE to
Sure.
the medical.
Previously,
Yeah.
you want more clarification on that? Is that your question?
I was just wondering if it's a COVID situation specifically, or are we going to see this recurring going forward from now on?
No, this is for our disability evaluations. Previously, when a member retired with a disability retirement, they would be examined by doctors of the DOE. Now those doctors will be employed at BERS, and BERS will handle the examinations, and we will employ the doctors. and we will have the space at BERS to do this. So that's what that cost is for.
And we will see this recurring in coming budgets going forward.
Yes, this will be a recurring every year cost, correct.
Thank you. That's it.
Thank you, Tazeen. So John?
Thanks, Tom. I just wanted to state for the record as well, I couldn't agree more with Donald and Greg, and that's all I have to say. I just wanted to state it for the record.
Thanks, John. So I will also agree with Donald, John, and Greg. I do have a question. So we have struggled with headcount, and I guess my question is, why are we not baking into our budget the types of salaries and pay raises that are that would attract employees to BERS, right? So I understand that part of it is, you know, city employees and like folks work on a scale. I get that part. But I am really interested in knowing if we do things like account for inflation, account for cost of living, etc. What are we doing in the budget to be able to attract employees, either maintain or increase our headcount? So I guess that's my question.
So it's rather complicated, Tom. As you stated, there are city rules on what we can hire people at within certain bands and when they come in. To pull back up the budget, so what you see increase, what we have done and we can control is responsibility-based increases. If a staff member is promising and doing great work, we will move them up a level that so that they can get a better pay raise. You see that 247,000 was for that in the budget. So that's what we did in the last year's budget, where we gave raises for increased work because we had a gap in our headcount in the budget versus what was actually employed at BERS. So this here is one of those things you're asking for that we are trying to do to maintain people. The problem is that this is kind of, you know, a nationwide issue in retaining staff, and with how many openings there are right now in various industries. For example, this person that left was hired in January, and he was given a $20,000 raise to leave within 8 months. Spent that time, you know, training him, but we couldn't compete with $20,000 increase given the role that he was. So that's what we've been seeing with folks that have been leaving, that it's been offered more money than given, you know, what we do here at the city can offer. So we're hiring, I think 26 people had last fiscal year, but we've lost 22. In the 2 years prior to that, we lost 3 combined, and 2 of those were they passed away. So really, prior to last fiscal year, we lost 1 person from an optional departure, and we've lost 22 this last fiscal year.
Wow. Okay. So I guess the second part of my question is, so this seems to be part of a larger conversation then. That's what I'm hearing, right? So, you know, so the city, I guess, would have to adjust its scale to make this more, or is there anything that we can do internally?
So what we requested in May, that 4% increase across the board would have helped that. Yes, but we are restricted to different levels for different titles in certain bands. For example, if we hire you as a associate time benefit examiner, there's a minimum and max pay we can pay within each level. So that's something out of our control. That's citywide.
Thank you. Are there any other questions?
Yeah, Tom, I'm sorry. I lost my
Yeah.
hand raising option here.
No, I see
So,
your hand there. Go ahead,
oh, it
Greg.
is. Okay, good. That's why I couldn't find it. It was still up. Is there any other forms of compensation or like, tuition assistance or other things that aren't necessarily salary that would not run afoul of the collective bargaining that we could have provided as incentives for people to stay, or has that also become problematic?
So the city has a program that offers scholarships through the mayor's office
Yeah.
for all BERS employees. That's citywide though for every
Okay.
agency.
All right. Okay. So there's nothing we could add additionally. There's nothing we could that wouldn't be a violation or would create some incentive to get folks to continue to stay or to continue with us.
That's difficult, Greg, because a
Yeah.
lot of it is through collective bargaining. Most of our
Yeah.
employees are unionized, so
Got
it's
it.
through their contract with the city of New York.
Okay. Thank you, Daniel.
You're welcome.
All right. So, are there any other questions?
I do have
Yeah, go
one
ahead,
thing,
Donald.
just for clarification. Daniel, so the collective bargaining agreement, I think most of the staffers there rather are under collective bargaining agreement with some of the locals at DC 37. Should a collective bargaining agreement be passed, is it the city that pays them or BERS budget directly?
So they're paid from, well, the DOE pays them and BERS reimburses the DOE for that payment. That's how it technically functions. But if the city would pass a collective bargaining agreement for our staff members, yes, then it would be in effect for them as well.
And I guess the second part of that is, so for those that are not covered by a collective bargaining agreement, does BERS follow the same pattern? Should there be a raise for those under the collective bargaining agreement?
It would have to come to the board for a vote to approve it.
Okay, all right. So, thank you for that clarification.
You're welcome.
All right. So, thank you, Daniel and Chitra. So, let's vote. All those in favor of adopting the administrative budget for fiscal year 2023 for the Board of Education Retirement System. All those in favor?
Aye, Ben.
Aye, Tom.
Tony.
Hi, Greg.
And Donald.
Any opposed? Any abstentions? All right, so the motion carries. The next item on our agenda is calendar item 20.
I'm sorry, Tom, can I add one thing? A little
Yes, go
caveat
ahead.
to that. I'm
Yes.
sorry, I should mention this earlier. As some of you know, some of you don't know, new trustees, there's an auto enrollment bill in Albany that was passed that would automatically enroll BERS eligible members after 90 days of employment. That if it's signed by the governor, BERS would come back to the board to readjust our budget. Just FYI.
Thanks for that, Daniel. I think that's really important because I know we've been talking about auto enrollment for a while now.
Okay.
All right. So the next item on our agenda is calendar item 20, appointment of Chief Actuary of the City of New York. May I have a motion to consider?
So
So
moved,
moved.
Donald. Second, Donald.
Seconded.
All right, thank you. Sandy, please tell us about this resolution.
So want to welcome Merrick to New York City. He is the process of a countrywide search to replace only the sixth actuary in the, is it 100 years now, Merrick, of the history of the Actuarial Office of New York? I may have gotten the 100-year span wrong, but not the number six. He's number six. Merrick comes from Ohio, which brought us Sherry Chan. He's got a great background, and we are one of the main authorities for approving the hiring of Merrick, and want to welcome him to New York. And if there are any questions for him, I would direct them from trustees directly to him because I am no actuary.
All right, thank you, Sandy. So are there any questions from the board? I'm hearing a little echo. I was wondering if folks could mute themselves. Thanks.
So we must have a motion to approve Merrick as the chief actuary of the city of New York. And we are among the, I think he must be approved by TRS and us, and then finally by other boards, but we are one of the key approvers of this hire. And
all right, thank you,
So,
Sandy.
So moved, Donald Nesbitt.
Okay.
Second from John.
All right. So we going there. All right. So all those in favor of the appointment of a chief actuary of the city of New York, may I have all those in favor?
Aye, John.
Aye, Tony.
Donald.
Hi,
Ben.
Karina. So,
Hi, Alan. Hi, Margie.
Hi, Angela.
Aye, Tom. Any opposed? Any abstentions? All right, the motion passes.
Merrick, I didn't give you a chance to say anything, and I apologize for not pronouncing your name, but I didn't want to soil myself with that. Could you just tell me how to pronounce your last name, Merrick?
Sure, it's Tiskevich. And one other thing for the record, today is also my birthday. So thank you for that vote.
Happy birthday.
Happy birthday.
Happy birthday.
Hey.
Congratulations. Yeah, thanks.
All right. All right, so the next item on our agenda is noting receipt of the fiscal year 2022 actuarial valuation report for BERS. May I have a motion to discuss?
So moved, Tony.
Thanks, Tony.
Second, Donald.
Thanks, Donald. We have our newly appointed actuary, Merrick, here. Merrick, would you like to give us some comments on the valuation report?
Sure, now I'll make this brief. I'd like to report that the final June 30th, 2020 actuarial valuation report is now complete. It has been delivered to the board. Recall that earlier this year in March, Mike Samet presented and the board adopted the final employer contribution for the fiscal year 2022. This final valuation report is for the same fiscal year and contains that same final employer contribution already adopted by the board, plus approximately 60 additional pages of supporting documentation. The final report is also available online on the actuary's website in the report section. And that's all the comments I have.
All right. Thank you. Are there any questions from the board? All right. Thank you. I'm hearing an echo. Okay. There we go. All right. So the next item on our agenda is calendar item 21, authorization to amend an agreement with Baker Tilly Virtual Kraus LLP to provide internal audit services to the Board of Education Retirement System. May I have a motion to consider?
Motion, John.
Thank you, John.
Second, Janine.
Thank you, Janelle. All right. Ade, forgive me. I don't want to mispronounce your last name. Our Director of Internal Audit is here to tell us about this resolution. Ade?
Yes, good evening, everyone. Can you hear me?
Yes.
Okay, my name is Ade Ezefili, and I'm the Director of Internal Audit here at BERS. This is a resolution to extend the current contract with Baker Tilly to provide internal audit services in a co-sourced arrangement with BERS Internal Audit for an additional 12 months to end in December 2023. The cost of this extension is $388,500 for 2,100 hours of internal audit work at a reduced blended rate of $185 an hour. Baker Tilly's services are needed to execute the audits per the internal audit plan approved by the BERS Audit Committee, as the request for internal audit staff headcount was not included in the approved fiscal year 2023 budget. Thank you.
Thank you, Ade. Are there any questions from the board? Okay, so at this point, let's vote on calendar item 21, authorization to amend an agreement with Baker Tilly Virtual Kraus LLP to provide internal audit services to the Board of Education Retirement System. All those in favor?
Aye, John.
Tony.
Rena.
Hi, Margie.
Allison.
Any opposed? Any abstentions? All right, thank you. The motion carries. The next item on our agenda is internal audit semi-annual update. May I have a motion to discuss?
So moved, Tony.
Thanks, Tony.
Seconded, Ben.
Thanks, Ben. Ade will present on her department's internal audit activities for the period of January 1st, 2022 to June 30th, 2022. Ade?
Yes, can everyone see my screen?
Yes.
Okay. All right, so I'm going to go right ahead and try to run through this in the interest of time. So today's presentation will focus on the internal audit activities for the first and second quarter of this year. So in the first and second quarters, we completed 3 audits: the employee experience and retention audit, payroll procedures audit, and call center audit. I'll go into some high-level discussion of the outcomes of those 3 audits in the next 3 slides. In terms of what we are currently working on in the department, we are currently wrapping up our audit of procurement activities, as well as our audit of check and EFT processes at BERS. We are also working on logical and physical access security review. And also, as requested by Sandy, we are working on the variable program takedown audit. The last 2 audits that we have planned for this year would be an audit of TDA refunds and also a travel and expenses audit. Lastly, we are currently undergoing external audit by Grant Thornton. This is the annual audit of the BERS financial statements that happens every year. So to give you a complete picture of the audit recommendations and past audit activities between January and June of this year, I have a chart on the right of your screen. I hope for you it's showing up on the right. The chart will depict the remediation status of audit findings as of June 30th, and then the table will give you the count. So as you can see in the chart, 13% of the high risk findings were fully remediated in the last 6 months, while 87% are still open. By open, we mean that they are either in progress or not started. And then regarding the medium risk findings, 28% were also remediated in the last 6 months, and 72% are still open. And then lastly, if you look in the table, you'll see that there were 26 new recommendations from the 3 audits that we completed, and that brought the total recommendations to 61. And of those 61, 23% were fully remediated and closed, so 14, while 47 or 77% are still open. Are there any questions on this slide before I proceed to the next one?
I did. This is Tony. I have a quick question. Do you know what the percentage of open remediation status carries from year to year?
So internal audit is going on 2 years at BERS, so I don't have a trajectory of remediation status. I mean, that's something that I could probably provide to the board maybe within the next year or so.
Okay, that's good. Thank you. Thank you.
You're welcome. All right, so the first audit is the employee experience and retention audit. Our goal for this audit was to assess the current state of employee experience in order to provide recommendations for improvement, thereby helping to improve retention. So our audit approach was to conduct interviews across the organization. We also administered surveys because we wanted to hear from everyone regarding their experience at BERS. In total, or as a whole, the level of feedback was around 65% from the staff. And for the managers, I believe we interviewed all managers except for one person that was, I think, on vacation at the time. So over the course of the audit, we noted several themes regarding challenges affecting the BERS employee experience. The first one was around goals and performance expectations. So many employees expressed to us that they did not have clarity around the goals and what was required of them in order to meet expectations that derive from these goals. They also expressed that they lacked an understanding of measures of success. And that ties directly into the next theme that we identified, which is pertaining to feedback. So regarding feedback, we noted that there is no consistent formal or informal feedback provided to employees, and that employees largely had a negative association with the word feedback. We also noted that supervisors did not regularly meet with their direct reports to provide performance or career growth feedback. And in summary, we felt like the general absence of feedback creates an environment where employees don't know how their work is being perceived, and this translates into low accountability. So the third thing we noted was around communications across teams and within teams. We observed that communication within department mostly flows from the top down, and there was little certainty that that information was trickling down to staff. This creates a high risk for information loss and distortion because it leaves a gap for employees to make their own interpretations and come to their own assumptions. We also noted a theme around leadership development. Many of the leaders at BERS are relatively new and young and are managing more people than they have in the past. And we noted that they would benefit from additional training and development programs so as to position them in a better space to grow and develop their teams as well. And then the last theme that we noted was around career advancement and growth. We noted that employees do not often have a clear path for advancement or professional growth, and many believe that professional growth at BERS was based on favoritism. Employees also expressed that even though there were trainings available for soft skills and things like that, they were very interested in hard skills and trainings that were very job specific to their tasks. Are there any questions around this before I proceed?
Hi, Ade. I have a question. So, um, when we talk about retention, I know we just had a discussion about the budget, and how much, um, uh, and how we are unable to maintain headcount because of, potential salary issues, right? So I am interested in knowing in your um, conversations or questionnaires with employees, um, how much did that factor into some of the observations that you made?
So a lot of the employees let us know that they let us know how they felt. So, and we took this as whether or not their feelings were based on fact. It directly translates into their actions and their experience, and therefore, how long they stay with BERS. From what we gathered, it's a combination, it's different strokes for different folks, but it's a combination of factors, and these were the main themes. Like, they feel like they're stagnant. They don't know how to advance their career within BERS. They're not getting feedback, like, how am I doing? They really don't know. I must say that this audit was done earlier in the year, and I know that HR has launched some initiatives to tackle some of these findings and implement some of the recommendations that we gave. So I believe that over time, we'll see things start to change slowly. But as with audit, it's a point in time evaluation looking backward. So this is what we noted for the time that we reviewed.
Can I just add to that today?
Of
Sorry.
course.
Some management feedback. So prior to the pandemic in 2019, we started the EFC employee feedback cycle, which started with the management team at BERS, and trickled down to supervisors, then to line staff, and that was a 3-year project. It's off the ground. As Day said when she talked to staff, this hadn't reached the staff yet, and a lot of this got pushed back due to COVID. Just wanted to add that we knew this was an issue and we were addressing it prior to this audit.
Thank you, Daniel. Thank you, Ade.
Thank you. So the second audit is the payroll procedures audit. This audit was conducted with the objective of assessing compliance with the New York City Controller's Directive 13. So Directive 13 sets the procedures for administering employees' payroll, timekeeping, and personnel actions. This is an audit that's mandated by the Controller's Office every year. This was the second time that we were doing this audit. So as we go down the findings, I'll be able to give you a comparison between the second audit and the first one. So for this audit, we reviewed processes around employee wages to determine compliance. And we found 4 instances of non-compliance with DCAS salary ranges. These were not significant, however, they were flagged because they were not in compliance. We also found inconsistencies in timekeeping for regular staff and temporary staff. And we also found issues with recording overtime and compensation for overtime. As I mentioned earlier, we repeated our testing of unapproved timesheets, and although we noted improvements compared to our prior audit of this area, we still found unapproved time records. So for perspective, when we did this audit the prior year, there were around 7,000 unapproved time records. And when we did the audit the second time around, there was around 1,300 unapproved records. So they have strengthen the controls a little bit, but there's still room for them to strengthen those controls further. That was that audit in a nutshell. I don't know if there are any questions before I go to the last one.
Ade, so Tazeen has a question.
Okay.
Hi, thank you, Audrey. I had a question from the previous sort of slides, but I think it could go across the board. I was just wondering, we heard that there were a large amount of folks who had left the birth system, and I wonder if there was a sort of a feedback mechanism for those that were on their way out. If there were any way that, or is there any time where you interface with them to really understand what were their specific reasons and if it tracks along with your findings in general, just to give it a little bit more emphasis on the reasons why they were heading out.
I believe HR administers and what's it called? Sorry, exit survey. When the employees are leaving, although not all employees conduct that, but we are not privy to the responses that were provided on those exit surveys.
Yeah, Ade, I'd like to add to that. We have our HR department has been doing exit interviews for the turnover in our staffing, and we'll report out the details on that in the October meeting. And to summarize it very quickly, most of the departures are coming from Gen X and millennials, and they identify the two major reasons for leaving is opportunities for advancement and compensation. And we are somewhat restricted given the civil service structure of employment in the city. And many of these people are going on to other opportunities at the state level or in private industry. And there'll be more detail about that in October.
Yeah, thank you for that, Sandy. And also, like to give it or to do a deep analysis as to why it's happening, not only in this is about across the board. I think I was going to ask for the demographic explanation that you said that it's upcoming, and I'm looking forward to seeing those, just so that it could help us hone in into specifics that leads up to this happening now as opposed to never before. Of course, pandemic is a marker, but still, I think there's other underlying issues that that needs to be addressed across workforce, and I'm sure that there is implication at birth also. So, thank you for that.
So I have a quick question on that point as well, right? So if we can go back to the previous slide for just a second. So I guess for me, to add to what Sazine was saying, and I kind of alluded to it in my previous question, but I'm really curious, right? Like how much, like when we get to an exit interview, right? So I'm wondering if um the audit observations we make here, right, allow us to be able to um make changes or improvements in a way that would prevent, right, sort of this exodus of folks that we have to um uh that not this exodus of folks, one, and two, like I wonder if the information from those exit interviews, like do we see patterns between this group of people and the people that leave, right? Because if goals and performance measures, feedback, intradepartmental communication, and leadership development um, are the issues that folks have issues with now, right? And then you know some of them leave. I wonder if in addition to um, advancement opportunities and compensation, right? Like, could we have predicted any of this with these observations? So I guess that's my question.
Yeah, I would offer the view, Tom, that it would have been very difficult 2 or 3 years ago to predict this because we had very little, very few departures from our staff historically. Daniel summarized it, I think, in the 2 fiscal years prior to the fiscal year where it all erupted and we lost 26 or so odd folks. There were, we lost 2 a year. And generally speaking, it was exceptional circumstances that caused that. Um, the hiring hasn't changed in New York City. The restrictions haven't changed. The compensation lags the private market, but there's a lot of turnover due to the youth in our country seeking better employment opportunities. There was a McKinsey study I shared with staff about 6 months ago that basically said that the best option for a young person is to change their jobs every 18 months, and they could expect up to a 50% increase in comp over 5 years. And so this is just a matter of the economy, I would argue.
Thank you. Yeah, I think uh, that's troubling. Um, uh, but I also think that it uh, should spark a conversation with us in both as a trustee board and the city in general, right? Like how do we make ourselves flexible in a way that attracts a younger workforce? So, so thank you for, kind of answering my question. I appreciate it. Are there any other questions?
I have a follow or a comment.
Yes, go ahead.
Yeah, so it is 100% a matter of compensation. Cost of living has gone up, but then I think it's also a matter of working conditions. I think young folks have realized that, or they have been exploring different types of working spaces and their rights and responsibilities in those spaces, and they're much more vocal in asking for those. I think now than they ever have been, and they see the trends across the labor forces. And then also there are much more people of color in these spaces that that hasn't been open to them for a long time. So I'm thinking more about working condition and atmosphere and sort of environment that they're setting themselves up that highlights or maybe sort of emphasizes the issue of compensation a little bit more. So I'm sort of interested in working conditions to look simultaneously, or maybe how that is consequential on their demands for compensation. So again, this is all interesting, and I would love to see the data they could pull and see exactly how we could sort of tease out these points going forward. But thank you. I look forward to the conversation.
Thank you. Ade, I know you had more, so
Yeah, just one
there we go.
last. Yeah, so the third audit is the call center audit. We conducted this one with the goal of assessing overall call center operations to determine compliance with their policies and procedures. We also wanted to determine alignment of call center processes with industry best practices. During the audit, the main thing we observed was that just over 50% of calls were lost, meaning that they were either abandoned, missed, or dropped. And a big reason for that was understaffing combined with a need for upskilling the call center reps. Other minor things we noted included that their procedures for tracking call notes were not consistent, and that their performance reporting was not in alignment with their objectives, which was more quality focused, while their metrics were more quantity focused. And that's it for this audit. If there are any questions, I'll be happy to take them.
Okay, so are there any questions? I do have one, but I certainly want everyone to ask their questions first. Okay, so I guess my question today is, have you been following this since this audit, right? Because I am really curious to know, has this gotten any better given the staffing issues we have with the call center?
So we have not performed repeat procedures. However, I've been following the progress on their remediation status. So in terms of hiring, the call center was staffed up to around 10, I believe, but unfortunately they lost one more person. So they're back down to 3 open head counts. They are in the process of interviewing and will be extending offers to 2 candidates, I believe. So they're actively working to fill their open spots. And then in terms of training, they have been working with learning and development to develop their manuals. I will have more updates at the audit committee meeting next in about 2 weeks, but they are working to update their manuals and to provide more training for their staff. They've also increased the frequency of their meetings with staff to give them feedback and just have open discussion about how they're performing on the calls. That's something that they're also working on. So short
Thank you.
answer is yes. Short answer is yes, and there's progress.
Thank you. I appreciate it.
You're welcome. So that's all I had for the board today. I hope everyone has a good evening.
Thank you, Ade. So our final agenda item is an investment strategy quarterly performance report. May I have a motion to discuss?
So moved, Tony.
Thanks, Tony.
Second.
Thanks, Donald. Antonio Rodriguez, our Director of Investment Strategy, will provide an update regarding our investment performance. Antonio?
Myself, sorry, you might see my kids in the background. So we have a couple extra folks joining us today. Thank you.
All good.
As Tom said, my name is Antonio Rodriguez. I'm the Director of Investment Strategy at BERS. And I'm here to give the Board of Trustees quarterly investment report presentation. Before I begin, I wanted to acknowledge the executive committee of the Board of Trustees who make decisions around investments on a month-to-month basis. That's Tom Shepard, John Matarich, Donald Nesbitt, Benjamin Schanbeck, and Gregory Faulkner, with alternate trustees Allison Hirsch, Nicholas Sudo, Sean Francois, Russell Buckley, and Marjorie Dinsang. So a little bit of background for the new trustees. In December 2021, the board passed a resolution giving the BERS Executive Committee authority to approve certain fund investments. As a condition of this authority, BERS Investment Strategy must report to the board on a quarterly basis on overall performance and progress towards meeting the program goals. The full Board of Trustees still retains authority over major investment program decisions. That includes improving the investment policy statement, the governing document for the investment program, approving asset allocation, our mix of equities, fixed income, and alternatives, hiring investment consultants, so your public and your general and specialty consultants, and approving active investment funds over $250 million in public markets and over $50 million in private markets. And the rationale behind that is the executive committee delegation allows both for more timely decision making on month-to-month decisions, while allowing the full board to focus on the long-term goals of the program, which are our long-term return target, which is 7% annualized. Our trailing 6 years is 9.2% annualized as of 6/30/2022, and 8.9% as of preliminary August 31st, 2022. Importantly, why we use 6 years is because that is the time it takes for the actuary to roll in the market returns for contribution purposes. A funded ratio target of 80 to 100%. Our estimation on a pro forma basis for the market value of assets funded ratio is of 100% as of June 30, 2022. As you recall, June 30, 2021, we were at 121% funded. And then monitoring the incorporation of investment policy statements, objectives in the investment process, whether it's cost consciousness, ESG, diversity, inclusion, and technology integration. We think it's a good balance. Trustees receive a lot of information from the Bureau of Asset Management, from the Office of Management and Budget, from the Actuary's Office. Being able to look at all that information in concert in making investment decisions is incredibly important for the long-term sustainability of the plan. So BERS full board sets the current asset allocation. It was last reviewed and set in 2020 to help meet our 7% return target over the next 3 to 5 years. From a big picture standpoint, we have 47%. Our target allocation to public equities, to stocks, is 47%. To public fixed income is 27%, and then to alternatives is 26%. We also have economically targeted investment in cash. They have no set targets, although they're allowed to go up to 2% for economically targeted investments and up to 5% for cash. This was our position as of 6/30/2022. As you can see, each of our major asset classes, we were under allocated and had a larger allocation to cash and ETI. Those were momentary movements. If you see where we currently stand as of 8/31/2022, we're a lot closer to our targets and well within our bands in all of the asset classes. And so, as you know, in public equity, we're divided between U.S. and international. Public fixed income, core fixed income, high yield, and inflation linked. Alternatives includes private equity, real estate, infrastructure, and private credit. And then we have no target for ETI, but we can invest up to 2% there, and then no cash target, but can go up to 5%. Sorry, to the next slide. Somebody has the annotation on here. Stop annotating. There we go. All right. So before we dive very quickly into performance, one of the things we looked at as an executive committee are 3 different types of benchmarks, and it, I think, really pertains to the opportunity to cross around our much more complex portfolio. So we use 3 different benchmarks. The first is the reference portfolio. This is the cheapest to deliver portfolio, so a 70% U.S. equity, 30% U.S. bond portfolio. This is our passively managed. A global reference portfolio, which is 70% global equity and 30% U.S. bonds, so a globally diversified equity program, and a 30% U.S. bond, so a domestic bond program. Again, all passively managed. And then a policy, what's called the PME benchmark, which is the public market equivalent. So it really kind of teases out whether or not it's worth it to invest in alternatives by comparing it to a public market equivalent, that asset class. So for private equity, it would be equity markets. For private debt, it'd be high yield debt, and so on. It really gets at, I think, a core decision. Going from passive to active increases our cost substantially. Going from active in public markets to private markets increases our cost substantially. So understanding whether or not it's worth it, I think it's really important as we're making those decisions. This is the portfolio performance as of 6/30, so it's the end of the fiscal year. BERS was down 9%. This was, and we talked about this before the first time we presented a down year to this board or any board since I've been at BERS. Our portfolio is around $8 billion, 7.9. Comfortably beat our global reference portfolio and our policy PME, which that's essentially we are overweight the U.S. and so we've done better than global markets because we are overweight the United States. And then we've done better than the policy public market equivalent, giving some comfort that the alternatives have helped with the performance over the long term. Yeah, this is a moment in time. Since then, the U.S. reference portfolio, that second line, has kind of caught up, but this was as of the end of the fiscal year. Again, we use the 6-year trailing because that's from our perspective, that's really, when the full market returns on a given year roll in for the city's contribution. So when we think about risk and think about risk to the cash flow to the city and to future members, it's really that's what we're trying to manage against when we're trying to hit our target. In addition, we have to talk to the full board about how many funds we approved during that quarter. So the executive committee approved 12 funds in the second quarter of this calendar year, making substantial progress towards hitting our commitment goals for the year in the alternative asset classes. As you can see, this is around a variety of asset classes: real estate, private equity, infrastructure, and private credit. Importantly, one additional way that the executive committee can approve funds if they're a successor fund, so meaning that or kind of colloquially called a re-up, meaning that if a fund is one we've invested with before and it's the same strategy, same terms, same fees, the executive committee is allowed to approve that fund as well. And you see, again, we approved one in public equity for Sincere, and then private equity, and then a few more real estate. One thing you'll note there's a few funds, HG Genesis, Nordic Capital, and Artemis, that are below $25 million. Our minimum in our IPS is typically $25 million. The executive committee can grant a waiver for that if these are capacity constrained funds. In these cases, each of these, the Bureau of Asset Management attempted to get us additional allocation, weren't not able to because of the capacity constraints. So as of the second quarter, you estimated that private equity and real estate are on pace to reach their target commitments. As of the second quarter, we were not on pace to reach infrastructure and OFI, although we're having a ton of those funds. And because we have to come back in October to give you another report, we're well on pace to be in range for all of our private market commitments for the year. And even though we have a executive committee, everybody's invited to join these discussions. So the next executive committee meeting is on Thursday from 1 o'clock to 3 o'clock. And these are just some of the upcoming discussion questions for the executive committee that I think really kind of magnify, the decisions the board has and the executive committee have to make in the coming years as we've moved out of a kind of secular bull run for our portfolio. One is, how should we address private market pacing? Real estate and private equity are at or above their targets. Infrastructure and private credit are below targets. Are our active managers adding value? So are we getting additional value from having managers that pick securities rather than just investing in the broader market in an index fund? For instance, developed market equity has our largest active managers by assets under management. We will be seeing a recommendation come shortly and making the case for perhaps additional indexation in the portfolio. How our policy decisions affect the portfolio? For those who have seen the IPS, we have an X energy and net zero pledge within our IPS that basically we do not invest in fossil fuel reserve owners, and we have a net zero pledge to be carbon neutral by 2040. And how will that affect our investment selection process going forward? We'll hear a presentation from the Bureau of Asset Management in October on this matter. Importantly, how does the leverage effect of a fixed TDA magnify market gains and losses? We have a kind of parallel fund that guarantees an 8.25% return that invests alongside the qualified pension plan or the defined benefit pension plan. We're estimating that that's 28% of our total assets and could rise to above 30%. That is going to have an effect on asset allocation decisions, especially with regard to the basket clause. We may have to consider how being kind of so levered in the portfolio may magnify the market gains and losses, and may or may not be helpful with regard to investing in additional alternatives. And then finally, do we achieve the goals set by the board at the beginning of the year? Pacing, commitment, searches, and projects. One big project, we're reviewing the defined contribution plans, and we'll hope to have a kind of selection process to the board by the end of the year. That was one of the goals set at the beginning of this year. I want to stop there. I know we're already a bit over time. I wanted to introduce for the new members Salil Mehta. He is the Deputy Director of Investment Strategy, and he's been working on some projects that kind of get to and kind of address some of these larger issues with regard to our investment portfolio. I'll turn it over to him, and then once he's done, we'll see if we have a quick time for questions.
Great. Hi. Hello, everyone. At the last executive board meeting, which was a little over 3 months ago, I gave 2 very quick presentations, and I'll just summarize 1 minute each on both of them. The first was about the ramifications of generally a large bear market, what we see as economic buildup in the system, and then these large losses, both on absolute as well as excess return basis, and how they are often coincident with broader recessions, which have downstream effects in terms of budgetary crunches and heterogeneous financial stress on folks who are near their retirement age. And I had stated then before the end of the fiscal year that we would probably see these sequential quarterly drawdowns on funding ratio estimates, and that the simulations in terms of what would happen in the future would have a fairly good probability of seeing further shortfalls in that, like 30% or so chance of going below 80%. And I will present future analysis that will provide additional data on this, because the original was just more qualitative, and talk about risk coherence and things like that. The second presentation was about the basket clause, and if that were to get passed, what sort of asset allocation might look like. And the presentation I gave previously, just because I had also just started and have my platforms up and running, I used the risk assumptions that we had at the time, which were already outdated given the fast moves in the market, and also our asset class utilizations at that time, and our internal, in terms of like BERS management, what we thought in terms of fittable and initial tactical leanings, and also unbiasing historical risk assumptions that we have, and gave a assessment of what our recommendations might be in terms of that additional flexibility. It's important to note that since then I've made additional improvements in terms of stochastic modeling, updating organic return assumptions, asset allocations, and future liability sensitivities. And overall, the recommendations shape up to very marginal changes on individual asset classes like high yield, private equity, and so forth, and no real change at a high level, because deviating from the optimal portfolio would come at a cost of statistical significance and a greater risk in order to get what essentially would be a spurious outcome in terms of these covariances that I talked about before in terms of market cycles. And then in terms of the projects, going forward. My own background's in statistics, risk modeling, actual modeling, and recession policies. And so I'm just very excited about providing a range of tools and ideas in terms of allocation and all the way to things that would impact from our decisions to future liability dynamics, and also the second order things that we talk about and how that impacts our area in terms of the types of managers we have, risk aspects to societal policy changes in our investments, and also distinguishing between correlation and causality when we're trying to make initiatives so that we can actually measure it and be informed about the risk-reward trade-off in the things that we want to do and what we're able to accomplish efficiently. Thank you. Any questions, you can let me know, but thank you.
Yeah, I see John's hand.
All right, thanks, Tom. This isn't really a question, it's just more of a comment and statement. Antonio and his team do an absolutely fantastic job. I don't think that can be denied by anybody. He's an asset to every member of BERS. Thank you, Antonio.
Chair, if I may, Janelle.
Yes, Janelle.
Yeah, I have to second that. Antonio, kudos to you and your team. You like benchmarks. I'm happy. I'm excited for October to get here to get the next report. And you've always been available for any issues and concerns. You've always had the door open if we needed any clarification. So the communication and your team has always been spot on with your recommendations as well. So it's greatly appreciated, and I'm glad you're here with us for this next for the future.
Thank you, Janelle. Greg?
Yeah, let me unmute myself. Yeah, I just want to ditto all of that. Antonio, and so, for me, sometimes these issues are complicated, and breaking it down in a way that it's understandable. So I also want to echo the work of his team as well.
Thank you, Greg. I have a question for you, Antonio. So I know that we, as a system, was what 120% funded, and given the volatility of things right now, right? We are, I think the number was what 101%.
That is pro forma, obviously, and we have
Right.
our new esteemed actuary here, so they will give us the final numbers. This analysis was purely pro forma, so if essentially everything stayed the same, as we know, things never stay the same. So this was really kind of just dragging forward, and so it was more of kind of a directionality standpoint. And what I think I wanted to show is that because of the leverage effect of the TDA, it helps on the way up tremendously. So I mean, the idea that the fact that we were 121% funded at 6/30/2021 at a 7% discount rate, and we're even 100% funded at a 5% discount rate using those sensitivities, show you how much things can change given the unique setup of our system. And so right, a 9% decline, I think from our perspective, looks like a 21% decrease in funded ratio. Over time, that's going to wash through. And again, I think we defer to the city's actuary's office to give us the final numbers, given, any changes in assumptions, and, certainly growth or declines in our population. But I think it was more of an exercise in showing that, well, we're still in, I think, a good territory. And why I think Salil's analysis is going to be so important around what does a bear market do? A kind of a sustained bear market due to our funded ratio. That's the ultimate goal, right? Ultimate goal is to have a funded ratio that shows strength and allows for us to maintain benefits for the future without taxing the city's budget, right? Like I think that's really our overarching goal for everybody who's involved in the system. And so yeah, I would say that it is more a way to kind of show direction and leverage effect. But the final number at 6/30/2022 numbers will come from the city actuary's office.
Thank you, Antonio. And I
And
just
just
want to add,
Yeah, I'm sorry, Tom, go ahead.
yeah, I just wanted to add one thing. It really does speak to the work that you do, right? That uh, you know, when you make like give us the information we need to make investments in such a way where when things are not when we see volatility, right, that we are able to absorb that in a way where our members um, uh, where our plan is still fully funded, right? And our members are able to continue on with uh I'm gonna say on some level business as usual, right? Like they don't see things in such a way where you have systems that perhaps um are underfunded, right? And have to struggle with making sure that you know they can make payments to retirees. Like we don't have that problem, and we don't have that problem uh, i- in large part to the work that your team is doing. So I want to say thank you.
I appreciate it. I would push down that a little bit. The reason that we don't have those problems is that we're funded by a strong city that puts in the money, right? Like that's really I think a lot of the problem. So I would say that all we want to show is kind of like, are there marginal positions that we should take given the complexities of our plan, right? I think that's pretty much it. And to that point, and that gets into the structure of our liabilities and cash flows. Like we've worked with the city actuary's office for 3 years on getting cash flow information. They did a fantastic job with that. We have information on all of our inflation links and everything like that. So I would say, it's at the end of the day, the fact that New York City puts in the money is why we're in the position we're in. But if we can help with understanding from a marginal perspective, because it's going to be marginal. U.S. stocks do good, we're going to do good. U.S. stocks do bad, we're going to do bad, right? Like that's just kind of how it is. But if we have some marginal improvements there within those bounds, I think that is where everybody here can add value.
I appreciate your modesty, though.
He's definitely being modest, Tom.
Yeah. Are there any other questions from the board? All right. So thank you, Antonio and Salil. So that concludes the agenda for this meeting. The next meeting of BERS Board of Trustees is scheduled for October 18th, 2022. May I have a motion to adjourn?
Motion, John.
Thanks, John. Thank you, Tazeen. All those in favor of adjourning the meeting, please indicate your approval.
Aye, John.
Aye, Tom. Any opposed?
And no one's
Any
opposed.
All right, everyone. Any abstentions, right? All right. So I want to thank you all for being here, and have a good evening, everyone.
Have a good night.
Good night, everyone. Bye.
Talk to you
Good night,
soon.
everyone. Bye-bye. Bye.
So.